So now let's go ahead with the next chapter, which is there in your book 2, that is book 2 detailed book. A very, very, very important chapter for our exam and also for our practical life. So it's a tricky chapter, let me tell you in advance only. So pay absolute attention on each and everything that we are going to learn in this chapter. Okay. Now there has been some significant changes in this chapter. Significant amendments made in the last 2 years. Let me explain you first of all how the things used to be before 2021 and how the things are after 2021. Listen carefully now, please. Till 31st March 2021, the things were absolutely different. And from 1st April 2021, the things are absolutely different. Okay, pay attention, please. Till 31st March 2021, there were two assessments. One was covered under section 147, which was called as income escaping assessment. Okay, pay attention, beta, please. Now, no masti, please. And there was one more assessment under 153A, which was called as search and seizure assessment. So till 31st March 2021, there were two assessments. 147 was called as section 147. 147 means section 147 was called as income escaping assessment, and section 153A was called as search and seizure assessment. Okay. And here the government used to do open your assessment for last 4 years in some cases. If your escaped income is around 1 lakh, I'll just put it completely over here. If your escaped income is less than 1 lakh, then the government used to open your assessment for 4 years. If the escaped income was greater than equal to 1 lakh, then the government used to open the assessment for 6 years. And if the escaped income has some foreign asset, then they could open your assessment for last 16 years also as per the old provision. Okay. 16 years assessment. So which year is going on now? 22-23, right? So even the assessment of 2005-6 can be opened in 22-23. And they can check that how you have invested in the asset in 2005-2006. Even for 16 years, they used to check the assessment. Search and seizure assessment was used to happen immediately after the previous chapter was done. Previous chapter was what? Search and seizure, right? Immediately after the search and seizure is done, they used to do assessment under 153A. And for how many years? In some cases, they used to do assessment for 4 years. And if your escaped income is likely to be greater than or equal to 50 lakhs, then they used to do an assessment for 10 years. So these were the two different assessments which were covered in 147 and 153A. You need to understand this particular pre-amendment scenario first of all, beta, to understand the post-amendment scenario. So pre-amendment scenario, if you hide any income and if the government catches you, then your assessment of last 4 years can be opened, of last 6 years can be opened in some cases, and last 16 years can also be opened in some cases. And if there is a search and seizure against you, then there is a separate assessment only. Then the government will not go over here for search and seizure. Then there is a separate assessment, section 153A, 4 years or 10 years if your escaped income is likely to be greater than or equal to 50 lakhs. Is it clear? But now Finance Act 2021, that is last year. Current year is Finance Act 2022, which is applicable for our exams of 2023, right? But last year, Finance Act 2021, there was a major change in these sections. Major change was what? The first major change was the government removed this section. Which section was removed? That is the reason I told that Bhavisha to come on time. You will not understand the things later. The major change was, first thing which they removed was what? The search and seizure assessment was removed and it was merged with this section. Now there is only one section now. So till last year there were 4 assessments under income tax law. Regular assessment, best judgment assessment, income escaping assessment, and search and seizure assessment. But now, after 2021, there are only 3 assessments because 2 big assessments got merged into one only. Are you clear? So now there is only one section, section 147 instead of these 2 sections. They all are merged in one, and there are only 2 possibilities now. If your escaped income is greater than 50 lakh rupees, how much? Then there will be 10 years assessment, and if it is less than 50 lakh rupees, then there will be 3 years assessment. That's it. Now there are only 2 time limits, 3 years or 10 years. That's it. It means what all removed? 4 year removed. Okay. 16 years is also gone. Are yes or no? So now the assessment can be done for either 3 years, maximum 3 years, or maximum 10 years. Not beyond that. Okay. So instead of academically, it has become slightly easier for us. Let me tell you honestly, academically, the things have become slightly simpler for us because the government has merged these 2 provisions. Otherwise, we need to learn 2 separate chapters. First 147 and then 153A. Okay. Now this new provision is applicable from when? 1/4/2021 it is applicable. That is from financial year 21-22. Okay. Because it came in the last year. In Finance Act 2021, in lockdown, they have done all these things. So now, we need to do 147 in detail. That is section 147, which is income escaping assessment, which will cover every kind of escapement. An escapement in the case of normal escapement and escapement in the case of search and seizure. Everything will be covered here. Okay. So now pay absolute attention, all of you. It's a tricky topic. It will blow your mind. I'm telling you, pay more than 100% attention over here. But it's a very important topic academically as well as practically. Practically, though nobody knows anything about this because it has been very recently introduced and a lot of people have a lot of doubts. So it will be an upper hand for you in the industry also if you learn this provision in a proper manner here itself. So shall we start with the discussion? Please tell me. Shall we start? So let's start with this section. Page number 17.1, that is your first page of your next book. That is book number 2 of your textbook. First of all, there is some bhashan which is given over here. What used to happen earlier, what is happening now. So let me read that once again. I am reading that introductory bhashan. Introductory comments. The provisions pertaining to income escaping assessment provide that if the AO has reason to believe that any income chargeable to tax has escaped assessment for any AY, he may assess or reassess or recompute the total income for such year under 147 by issuing a notice under 148. However, such reopening is subject to time limits prescribed in 149. Where a search is initiated under 132 or action is initiated under 132A, assessment is made in the case of the assessee or any other person in accordance with the special provisions of 153A, 153B, C, D that deal specifically with such cases. Due to advancement of technology, the department is now collecting all relevant information related to transactions of the taxpayer from third parties under 285BA, that is Statement of Financial Transaction. Similar information is also received from other law enforcement agency. A completely new procedure of assessment has been incorporated in the aforesaid cases with effect from 1st April 2021. Now listen carefully. The salient features of the new procedure are given below. Till here, nothing is important because this is all old bhashan. What used to happen earlier, forget about it. What used to happen earlier, we are not interested in what used to happen earlier. We are interested in what is happening in today's time. Please start your video, please. Now, you have to be very patient enough. Please, I am telling you, we are not going to complete this topic today under any circumstance. We will be continuing this topic tomorrow. But the most important part and the most difficult part of this topic, there is nothing difficult in this world. It just depends upon how well you can understand that and how fast you can understand. You have to pay attention. That's it. Nothing is difficult. But it is slightly tricky. The most important part of this chapter we are going to do today itself. Today, whatever time is left in today's time, that is 1 hour 15 minutes. In that time itself, we are going to do the most difficult part and most important part of this section. So pay absolute attention. Section 147. We are starting with the income escaping assessment now. This is the main section. This is the main section. Let me read this main section first of all. And please call her. Where is she here? You'll miss important things here. Section 147 has been substituted with effect from 1st April 2021. Shall I read? Shall I read? Section 147 has been substituted with effect from 1st April 2021 to provide that if any income chargeable to tax in the case of an assessee has escaped assessment for any AY, the AO may, subject to the provisions of 148 to 153, assess or reassess such income and also assess or reassess, recompute any other income chargeable to tax which has escaped assessment and which comes to his notice subsequently in the course of what the proceedings under this section, or recompute the loss or depreciation or allowance or any other allowance as the case may be for such assessment here. I want you all to read this paragraph once. Please read it once. I'm giving you 2 minutes. Now, pay attention please, all of you. Leave aside everything. Pay absolute attention. Start your video. Pay attention over here. There are a lot of small things which are mentioned over here. Pay attention please. Shall I start? This is previous year 22-23 going on. If in this previous year AO finds that you have escaped some income in say previous year 1920 or 1819, then he has the power to reopen your assessment in the current year and charge tax on that income. Okay, but it's not that easy, let me tell you. So again I am saying in the current year, that is in previous year 22-23, if the AO finds that some income was escaped in 1819, then in that case he can reopen your assessment in 22-23 and he can charge tax on that income, interest on that income, penalties on that income as well. So the first question which we need to answer over here, what do I mean by escaped income? Because of whose mistake income can be escaped? And what will be the imposition of that, implication of that on the assessee? What do I mean by escaped income? First we need to understand that escaped income means what? So the income can escape because of two things. Listen carefully. Income can escape because of assessee's default, because assessee has made some wrong deductions, because assessee has not shown some income, so that the income can escape. If the income is escaping because of assessee's default, then in that case assessment under 147 will be done on you. This is a draconian assessment, not a very simple assessment, very dangerous one. There will be taxation imposed on you, there will be interest imposed on you, and there will be a penalty which can be imposed on you. Suppose you have escaped an income of 10 lakh rupees. Okay. You have escaped an income of 10 lakh rupees. What do I mean by escapement of income? Escapement of income can happen in any of the two ways. Either you are not showing the revenues or you are showing excessive deduction, excessive claim of expense is also escapement of income. Yes or no? Instead of claiming a deduction of 10 lakhs, you are claiming a deduction of 25 lakhs. So are you escaping 15 lakhs or not? So that is also escapement of income. So if you are making a mistake, it's the default is of assessee. And if the assessee is making a mistake and escaping an income, listen carefully the consequences. Suppose you are escaping an income of 10 lakh rupees. Then there will be 30% tax first of all, plus surcharge and cess, whatever it is. Then interest. Then penalty of 200% of tax. How much penalty? How much penalty? 200% of tax. That will be the penalty which can be imposed on you. You will learn in the later topic in the chapter of penalties later on. So if you are escaping an income of 10 lakh rupees, 30% goes directly in tax, then surcharge and cess also. Then interest will be imposed. Various section interest will be imposed. We have not done any interest so far. Then penalty of 200%. You just try to imagine and make a rough calculation in your mind. Nothing will be left in your hand. If there is a 10 lakh income you escape, 30% you pay tax, then interest you pay and 200% penalty. What will be left in your hand? In fact, you have to pay extra from your pocket. And are you able to understand? Video. Therefore, it is very dangerous. Don't escape income. Don't escape income. Escapement of income means don't undershow your revenue. Show your revenues properly. Don't overstate your expenses. Show your expenses properly. Show your depreciation properly. Okay. Now, this is the first reason. This is the first reason how income is escaped. The second reason how income is escaped is very important for us. Listen carefully, pay attention over here. Income, this is a technical one. The second one, try to understand, it's a very technical topic. 1 second here and there and you will be gone out of this topic. I'm telling you very seriously. It is not a Haltu assessment like 143 or 144. There was nothing in that assessment. This is a great assessment. So listen carefully. Income can also get escaped because of subsequent development in the law. It means what, sir? What do you mean by subsequent development in law? Listen carefully. Suppose in 1819, you are Mr. A, and in your case, the AO allowed you an expense. Allowed an expense of rupees say 10 lakhs. Okay. So you took deduction of this 10 lakh rupees in your PGBP income, right? Now in 2022-23, suppose there is a Supreme Court judgment which comes. Listen carefully, please here. In 22-23, there is a Supreme Court judgment which came in case of Mr. B. Mr. B is some other person. In some other person's case, this judgment came. And in some other person's case, this similar expense was disallowed by Supreme Court. Can it happen or not? Now listen carefully. In your case, what has happened few years back? The AO has allowed that expense to me. But in some other case, the AO might have disallowed, the matter went to Supreme Court and the Supreme Court has also disallowed that expense. Now I have a question to you all this. Therefore, can I say my AO has made a mistake few years back? Can I say my AO has made a mistake few years back by allowing that expense to me? The answer is definitely yes. He should have also disallowed. Because what Supreme Court is saying today, that is the correct interpretation of the law now. It means my AO has made a wrong interpretation of the law. Therefore, today Supreme Court has made a development in law by giving its judgment. This is a subsequent development in law. Now, this gives the power to my assessing officer that he can disallow this expense in my case. Also, he can open my assessment 3 years back. Try to understand, it's not a very straightforward topic. It's a very tricky topic. That's the reason I'm saying pay absolute attention. So, in my case, which was allowed 3 years back, yes or no? But now Supreme Court judgment is coming in some other case that disallows such expense. So, my assessing officer will be active now. And now he will open my reassessment. He will open my assessment of 2018-19 and he will disallow that expense. Are you able to understand that? He has that power. But in such cases, listen carefully. He will disallow the expense. He will do assessment under 147, but he will take tax, no interest, no penalty. Check over here. Because it was not my mistake. I have not hide any income. I have shown everything correctly. AO has not disallowed that earlier. It was his mistake na, that he didn't disallow. He should have disallowed in 1819. If he would have disallowed in 1819, this issue would have not arisen only. So in subsequent development of law, they will charge tax on you, but they will not take interest and penalty. Are you clear? So escape, income can escape because of two reasons. Because of assessee's mistake. Listen carefully, please. If it is because of assessee's mistake, they will take tax also, interest also, penalty also. They are not going to leave you. But if it is not because of assessee's mistake, you can say if it is because of assessing officer's mistake. Yes or no? Right hand side I can say no, it was because of assessing officer's mistake. So in that case, they can impose tax, but they will not impose penalty and interest. Is it clear? Is it clear? Now pay attention, beta, please. It's a very difficult topic for me also to teach. Coming back to this main section. This is the main section. This is the heart of this particular chapter. Everything revolves around these 6 lines. Everything. I'm reading this section once more. I have read once more earlier. I have allowed you to read once. Now I'm reading once more because everything will revolve around this chapter. This entire chapter of around 7 to 8 pages is an interpretation of these 6 lines. That's it. Section 147 has been substituted with effect from 1st April 2021 to provide that. Are you paying attention? First of all, I am not feeling that you are paying attention. Are you? To provide that if any income chargeable to tax in case of assessee has escaped assessment for any AY, the AO may underline subject to the provisions of 148 to 153 assess or reassess such income and also any other income chargeable to tax which has escaped assessment and which comes to his notice subsequently in the course of proceeding under this section, or recompute the loss or depreciation allowance or any other allowance as the case may be for such assessment here. Listen carefully. Who has the power to do this assessment? AO has the power to do this assessment. We have done 2 more assessments earlier. That is regular and best judgment. There also who had the power to do assessment? AO. Everywhere, always remember, it is the assessing officer who will do the assessment. Okay. Every year. CIT will not interfere. Chief CIT will not interfere. Other higher authorities will not come into picture. It is only the assessing officer who is going to do. Listen carefully. But when you read this entire paragraph of 6 lines, it is saying very important sentence in the bracket which says that subject to 148 to 153. It means if the AO wants to do an assessment under this section, he has to follow 148, 149, 150, 151, 152 and 153. Unless and until he follows these 6 sections, he will not be able to do assessment under this section. This section is dependent on the next 6 sections. So understanding this section means understanding 7 sections including this. So 147 is not 147 in isolation. It is 147 plus 6 more sections. Are you clear? So we need to understand the entire procedure now. One by one, 148, 149, 150, 151, 152, 153. Pay absolute attention, beta. It's not that cakewalk. Please, you have to pay absolute attention in today's lecture. Listen carefully. Leave aside everything. There is an AO over here. This is previous year 20 to 23 going on. He came to know that income is escaped in previous year 18-19. Okay. Now what will he do? What will the AO do after this? I'm not asking you any question. I'm just raising questions so that I can answer. What will AO do after this? He has to follow the procedures mentioned in section 148, 149, 150, 51, 52, 53. He has to follow these 6 sections. So now what is written in these sections? Obviously, there are a lot of things written. There's a lot of content in these 6 sections. So what is the first thing that AO will do, sir? Okay. What is the first thing that AO will do? The first thing which AO will do is there is an assessee over here. He has to ultimately deal with assessee only. Okay. What is the first thing that, please pay attention here. So what is the first thing that he will do? He will send you a notice under section 148. Under which section? You have to by heart this procedure and go home today. Please. You have to learn this properly. 148. Sir, what will be written in this notice? Okay. What will be written? What will be written in this notice? Pay attention. It will be written that file ROI. File return of income. Return of income? For which year? For 18-19. For 18-19, I will file return of income in 20 to 23. Yes. So AO finds some income that which is escaped by you. A will send you a notice under 148. You have to file the ROI. You have to file the ROI. Under which section? This ROI is filed under which section? It is filed under 148. The way ROI is filed under 139, 139.1, 139.3, 139.4, 139.5, 139.9, 142 subsection 1 clause 1. Similarly, this is the last section of ROI in our life. That is 148. File an ROI under 148. Okay. I am teaching you something, and Times of India has a notification that there is an IT raid conducted in slum office. 90 crore donations received. Right now, there is a notification of Times of India. Anyways, great coincidence. Pay attention, please. So the first thing will be done by the AO is, he will do what? He will send a notice to you to file what? File an ROI, return of income for 18-19. Sir, I have already filed a return of income for 18-19, sir, in 18-19. File again. File again because earlier you have filed a return of income without showing this escaped income, right or not? Now file again by showing this escaped income. You have to show this income in your ITR. Okay. Sir, in how many days I will file the return? That will be mentioned in the notice. Okay. Where it will be mentioned? It will be mentioned in the notice. So first thing which we want to understand in today's lecture is we need to understand section 148. What 148 has to say. So let's try to understand what 148 has to say. All of you come to your book to 148. Beta, please have patience in life. The first 2 pages are going to be very dangerous page of this chapter. The rest of the things are easier. I am reading. 148 has been substituted with effect from 1st April 2021. The new section provides as follows. Shall I read? This is step 1. Before invoking the provisions of 148, the AO is required to conduct an inquiry within the parameters of 148A. Now, what is 148A? Listen. Have patience. I have just told you, not taught you also. I have just told you what is 148. What is 148, beta? Arey, tell me na, don't see in the books. Please tell me. Arey, what is 148? I have just told you na. Notice for what? Notice to file ROI. Now, even before that, there is one more condition. That before sending this notice, the AO has to make some inquiry in 148A. Are you able to understand that? So even before sending this notice, this is the first thing na. So even before this first thing, he has to do something. And what is that something? He has to do some kind of inquiry under 148A. Yes? You can go to the next page and see there is an inquiry section on the next page. You can see. We are not reading that as of now. We'll read after some time. Okay? So even before sending a notice under 148, he need to do an inquiry. Inquiry. How that inquiry is done, sir? That I'll teach after some time. Don't worry. Assume that inquiry is done. Let's assume, okay, so that we can at least complete this section first. Otherwise, we'll go here and there. We'll confuse with both the sections here. Let's complete one section at one point of time. Assume that inquiry is done. Okay. Now, shall I send him the notice to file ROI? Yes. Let's read this step 2. After conducting inquiry under 148, assume that inquiry is done. But before making the assessment or reassessment or recomputation under 147, the AO shall serve on the assessee a notice. He has to serve on the assessee a notice along with the copy of the order passed under 148A. Copy of what? Copy of inquiry. That my inquiry is done. Requiring him to furnish a return of income or return of any other person in respect of which he is assessable within a specified period. So what this paragraph tells you, if you read completely, it tells you after the inquiry is done, on the next page, you are supposed to send a notice to the assessee. Yes or no? Notice for what purpose? For assessee to file the return of income. Is it clear to all of you? Yes or no? So now, step by step, can I say the first step which the AO has to do is to conduct inquiry? Then he has to send a notice to the assessee to file the ROI. Now, the question is, why the hell they will send a notice? Will they send this notice to random assessees? No. They will send the notice because they have some information with them, na? That you have escaped income, beta. So why they will send the notice is given in this particular point. Step number 3. Shall we read it? However, no notice under 148 shall be issued. No notice under 148 shall be issued unless, underline, there is an information with the AO. Underline till the extent I am doing it, which suggests that income chargeable to tax has escaped assessment. Underline this much. I am highlighting also this much. This is one of the most important sentence of this chapter. No notice under 148 shall be issued unless there is an information with the AO that income chargeable to tax has escaped assessment in case of the assessee for the relevant AY. Moreover, prior approval of the specified authority to issue such notice is required. Now listen carefully. Just wait now. Have patience now. Have patience. Step by step we'll talk. First step. What the AO will do as a first step? He will conduct inquiry on the next page, about which we do not know much as of now. Okay? Assume that inquiry is done. Inquiry is done. What is the next step that he has to follow? Send a notice to the assessee. For what? To file ROI. Within how much time? Specified in the notice, which is generally 30 days time. Generally. I am telling you out of industry experience. Now the third point says that you should not send a notice unless there is an information with the AO which suggests that income chargeable to tax of the assessee has escaped assessment. Yes or no? So what is the meaning of this phrase? When the AO can say that I have an information, when the AO can say that I have an information which suggests that income chargeable to tax has escaped assessment. This entire phrase which is underlined in red line, can you see that? This entire phrase is defined by the Government of India in explanation 1 to section 148. Can you see this entire phrase over here? I am striking that off because of some reason. I'll tell you what is the reason. Okay? Can you see that? What is that phrase? For the purpose, information which suggests that income chargeable to tax has escaped assessment means what? means two things. Can you see that? Don't get into all those things. Try to understand the structure of the section first. Then we'll read the paragraphs. Can you see that? Now there are two things which government feels that there are two things. Point number A, point number B. If either of the two things have happened, try to understand. Please pay attention beta over here. You need to understand this order of the law. If either of the two things have happened, then the AO can proudly say that I have an information which suggests what? That income chargeable to tax has what? Escaped assessment. Can I say in that case he gets the power to send the notice? Yes or no? Because unless he has this particular sentence with him, unless he can prove that he has an information which suggests that income chargeable to tax has escaped assessment, he has no power to send the notice, because it is written in this third paragraph. No notice can be sent unless he has a proof that income chargeable to tax has escaped assessment. Are you clear? So our entire duty is now to understand what do you mean by this phrase. When can I say that I am an AO? For example, when can I say that I have an information which suggests me that income chargeable to tax has escaped assessment in assessee's case? When can I say? The government has said that we are putting 2 points over here, A and B. Now, when they have brought this particular section, at the beginning of this particular provision, I have told you, when they have changed this entire section in Finance Act 21, yes or no? Last year they have brought this new section, na beta? Beta, I have given you at the introduction of this section the bhashan. When they have brought this new section, 2021, Finance Act 21, right? It means everything is brought in the Finance Act 2021, please. Everything, the entire section was changed in 2021. Now listen carefully. This explanation was also brought in Finance Act 2021. Now see the consistency of the Income Tax Department. They cannot stay with what they have said for 1 year also, and they have removed these 2 points, and instead of these 2 points, now they have brought in Finance Act 2022 5 points instead of 2 points. Are you able to understand this? First of all, they have brought these 2 points last year only, and they cannot remain consistent with those points for 1 year also. And immediately in the next year, they have changed the entire meaning of the phrase. What do you mean by income chargeable to tax as escaped assessment? Are you able to understand? So in today's time, income chargeable to tax escaped assessment means what? Means 5 points. If either of the 5 points are happening, okay, then the AO has the power to send you a notice. Shall we read one by one all of them? Let's read. Explanation 1 to section 148 has been amended with effect from 1/4/2022. Can't you think in the last year itself that you have to put these 5 points when you make a new section? So they make sections in hurry, and then they realize after a year that we have made some mistakes, we need to change this, we need to change that. At least keep it consistent for 3-4 years, yaar, when you are bringing a new law. It is so confusing for the taxpayers, for the assessing officers, for the department also, if you make such frequent changes every year. Explanation 1 to 48 has been inserted. Has been amended, in fact, not inserted. It was inserted in 2021, but amended in 2022 again, to provide that for the purpose of the said section. And 148A, the information with the AO which suggests that income chargeable to tax has escaped assessment means point number A, point number B, point number C, point number D, point number E. Shall we read better? Please pay attention. Are you there with me? Point number A. Any information in the case of an assessee for the relevant AY in accordance with the risk management strategy formulated by the board from time to time. Now what do I mean by this? Listen carefully. Shall I say? पहले अपना वीडियो चालू करो प्लीज. I cannot see your expression. I cannot teach. क्या हो रहा है? Anyways, pay attention please. Now, what is the first thing which can be said that the AO has information which suggests that income chargeable to tax has escaped assessment? Highly technical point. Any information in the case of an assessee for the relevant area in accordance with the risk management strategy formulated by the board from time to time. What does it talk about? Do you know that? Write it in the bracket. SFT. They are talking about SFT. If your information is shown in the CBDT's SFT, they can say we have an information which suggests that income chargeable to tax has escaped assessment. That is the reason do not do anything which comes in SFT. What comes in SFT? Can you give me some illustrations, some examples of items which comes in SFT? Cash deposits of 10 lakh or more in saving account. FD if you purchase of 10 lakh or more. If you purchase an immovable property of 30 lakhs or more. If you purchase mutual fund shares of 10 lakh or more, right? Do not do. If you are doing all these things, you should have a proper source of income, right? If you have source of income, you are doing this, no worry. If you do not have a source of income, if this is put in the information system of the CBDT, listen carefully. The information of the CBDT which will include what? Which will include SFT, right? Which will also include what? AIS. If it is reflected in SFT or AIS, annual information system, and if the department will start to compare your what investments with your source of income, and if they find that your investments are more and your source of income is less, they will definitely send you a notice. They will definitely say that now our assessing officer, listen technically, they will definitely say that if your investments are 30 lakhs and if your source of income is 10 lakhs, they have information which can suggest that income chargeable to tax has escaped assessment. Can you say this? Can you say this? This will give them the power to what? To issue a notice under 148. Are you clear, beta? Second point. Any audit objection box to the effect that the assessment in the case of an assessee for the relevant area has not been made in accordance with the provisions of the Act. Any audit objection has been made by the auditor. The auditor has made an objection. So that objection can be the basis for the CBDT, for the assessing officer to say that I have an information which suggests that income chargeable to tax has escaped assessment. Did you understand? Now they have made small amendments. What small amendments? Earlier there was a flag word over there. They have removed the word flag from here. You can check. The amendment which they have made, I am telling you that. Second, in second point, there was an audit of only CAG. Now they have removed the word CAG. You can check. Any audit would be covered. Are you able to understand? I am just trying to explain you what amendments they have made. You are not supposed to know that. You are supposed to know the new one. So the first 2 points were there last year, but they have made minor changes in that. And the next 3 points are absolutely new points. Okay? Shall I go ahead? The third point which can be called as what? The information chargeable to tax has escaped assessment. Third, any information received under agreement referred to in 90 or 90A. You can write in bracket DTAA. DTAA stands for Double Taxation Avoidance Agreement. Listen carefully. If the Income Tax Authority in India, listen carefully, I have taught you in the chapter of Income Tax Authority and Powers. Please pay attention. If the Income Tax Authority wants information of Vijay Mallya, they have to have a DTAA with United Kingdom. Did you know I have told you this? So if the United Kingdom and India has a DTAA under section 90 or 90A, and if the United Kingdom authority is giving me what? Some information about Vijay Mallya, I can say that I have an information which suggests that income chargeable of Vijay Mallya is subject to tax. Are you clear? So these points are telling you from where all you are getting information. The first information you are getting from SFT or AIS. The second information you are getting from audit objections. The third information you are getting from what? You are getting from DTAA, etc. Okay. The fourth information. Any information made available to the under the scheme notified under 135A. Now what is notified under 135A? What is notified under 135A is 133. 133 is what? Collection of information. Do you remember that? Calling of information. All these things are covered in 135A. Let me show you 135A in the previous book. Can you see this 135A beta? See on the board. This covers calling of information, collecting of information. Can you see this? So the AO sends you notice under various section to call for information. So that information can suggest him or not that your income is chargeable to tax as escaped assessment. So that can also be the case. And the last but not least, point number E, that you will explain me now. Any information which requires action in consequence of the order of the tribunal or court. Can you explain me this, or else I am always there? I am not telling you that you have to explain this. It's okay even if you not. But if you can, nothing better than that. Can you explain me this? If no, then also it's okay. Shall I? Shall I? Now listen carefully. What does this particular point means? This point means there is a high court judgment, or there is a tribunal judgment, there is a Supreme Court judgment. Okay. In some other case, there is a high court judgment, there is a Supreme Court judgment. Okay. In some other case, which says that this expenditure is disallowed. Can that be considered as an information for me to disallow your expense also? Subsequent development in the law. Now check. Point number E talks about that. Now AO should have either of the 5 things with him. If he has either of the 5 things, he has got the power what? Beta? He has got the power what? To issue notice. Okay? So we'll learn step by step once again. Shall we? First step should be what? He wants to do assessment under this section. First step, he has to do inquiry, about which we do not know as of now much. Assume that inquiry is done. Then what is the next step? Issue a notice for what? For filing the ROI. But before issuing the notice, he has to fulfill that large sentence, na? What is that large sentence? You have to by heart that sentence, please. Income chargeable to tax, he should have an information which suggests him that income chargeable to tax has escaped assessment. And what do I mean by this phrase? This phrase means he should have either of the 5 things mentioned below. Can you see that? Now what if he doesn't have any of them? Can he send notice? No, he cannot send notice. He doesn't have information from SFT or AIS. He doesn't have audit objection. He doesn't have information from DTAA. He doesn't have information from collection of information. He doesn't have what? Any information from court or tribunal's order. He cannot send notice. Yes or no? Now pay attention, please. We are moving to the last part of this first section. Shall I? But just below this explanation, the government has added another explanation, explanation 2, which is very dangerous for us, Asi. Very dangerous. Shall we read? Yes, let's read that. In the cases given below, it shall be deemed that the AO has information which suggests that income chargeable to tax has escaped assessment for 3 years immediately preceding the AY relevant to the PY, in which all these things are striked off by Finance Act 22. You can see over here, strike off words are removed by Finance Act 22. So ignore that, beta. Shall we read again by ignoring that paragraph? In the cases given below, it shall be deemed that AO has information which suggests that income chargeable to tax has escaped assessment, where the search is initiated or acquisition is made or any material is seized or acquisition or survey is conducted. It means what you know? What is the danger part of this particular provision? Explanation 2. See here. Please see here. In these cases, it is deemed that you have escaped assessment. It is deemed that you have escaped income. It means in these cases, you don't have to fulfill these conditions to send notice. Now, which are those dangerous cases? If the search underline is initiated under 132 on or after 1st April 2021, try to understand. If a search is conducted on or after 1st April 2021, by default, the AO will send you notice. He do not have to fulfill any of the 5 conditions mentioned above. Are you clear? And that is the reason I have taught you in the last chapter. After search and seizure is done, did I tell you or not that you will be liable for an assessment under 147 by default? He will directly send you a notice. He will not get into the activity of finding out whether either of the five things have happened or not. Are you clear? Second, first case is what? Search case. If the search is conducted on or after 1st April 2021. Sir, why on or after 1st April 2021? Because I have told you, pay attention on the board, please, that this new section is applicable from 1st April 2021. Before 1st April 2021, there was a separate search and seizure assessment. Do you remember that or not? So this new provision is applicable from 1st April 2021. Earlier it was not applicable. Second point, pay attention, please, pay attention. If a survey is conducted under 133A, then also there will be a direct assessment. Yes, not being survey under 133A, subsection 2A or subsection 5. Now see how minute amendments have been made up. When they brought this amendment in the last year, they have excluded these two sections. But in the current year, they have removed one of them. Now we need to understand what are these surveys. Let me tell you first of all. 133A survey, subsection 2A is the survey of TDS and TCS. Do you remember that? They can do survey for TDS and TCS also. And subsection 5 survey is for ceremonies. Is for what? Ceremonies, wedding functions. Can they do survey in subsection 5, ceremonies, wedding, etc.? I will show you that, because knowing that subsection in detail is relevant for understanding the concept. This is the section of your survey. Okay, see on the board all of you. Subsection, which two subsections are mentioned over here? Can you see this? 2A, TDS, TCS. And can you see this subsection 5 for ceremonies, events, functions? So I am highlighting this. Subsection 5, ceremonies, event, functions. Subsection 2A, TDS, TCS. Please, now I want this much interpretation to be done from your side. I expect that much to be done from your side. Please tell me. They have excluded two surveys from your last year. Now out of that, they have removed one survey from here in the current year. It means now in the exclusion, there is only one survey. So can I ask you one question? If they are doing survey, forget about these 2 points. Now, general survey. Are they supposed to fulfill these 5 points? First question, if they are doing general survey, forget about these 2 points. Are they supposed to fulfill, is the assessing officer supposed to fulfill these 5 points? Can he directly send you a notice? Perfect. Second question, he can directly send you a notice. If they are doing a survey, for TDS, TCS, for what? Are they supposed to fulfill these points? Arey beta Kajal, read properly. If they are doing survey for TDS, TCS, can they directly send you a notice? Or they are supposed to fulfill either of the 5 points? Because the TDS survey is excluded from direct notice, na beta. Third point, if they are doing survey for ceremony or events or functions or weddings, are they supposed to fulfill these 5 points? Are they supposed to fulfill these 5 points? Absolutely no. Are you clear? Only for one survey they are supposed to fulfill these 5 points, and that is 133A subsection 2A, that is TDS survey. Are you clear? Perfect beta. The third and the fourth point also, if you read, that is about search and seizure only. Check. Is it clear? So now let's do this much without looking into the books and understand the procedure at our end. Please tell me, what is the first thing that the AO will do? Inquiry. Under which section? Which we don't know as of now how it is done. Okay, we'll see just now. Once the inquiry is done, what is he supposed to do? Send a notice. Under which section? For what? ROI. But before sending this notice, he should have something with him. What is that? Some information he should have which suggests that income chargeable to tax has escaped assessment. Now, what do I mean by this phrase? 5 points. Is it clear? Can you tell me 5 points in your own language? He should have information from DTAA, correct? SFT or AIS. Audit objection. Then court order, tribunal order. Then 135A collected information. Okay. Now he should have either of the 5 information to send this notice. Now is it always necessary to have this 5 information? In explanation 2 cases it is not necessary. Can he directly send you a notice? In which case? If the search is conducted on or after 1st April 2021, okay? Or if a survey is conducted on or after 1st April 2021 other than TDS survey, okay? Perfect, beta. Now, let's go ahead with the discussion. The discussion is not completed. Shall I go ahead? Now, let's see how inquiry will be conducted. How? That's the first step, na? How inquiry will be conducted. Under section 148A. Now, I am giving you a brief synopsis and then I will read the provision. Okay. Now, please tell me, AO has information that you have escaped some income. So, what he will do? Step 2. I am telling you the steps of inquiries now. Okay. Shall I? So, AO has information that you have escaped income. That information can be either of the 5 information. Now, AO will do no. What do you know? AO will send you a show cause notice. AO will send you what? Show cause notice means what? He is trying to give you what? Opportunity of being heard, right? He will tell you that I have an information that you have purchased a property of 50 lakh rupees. Please tell us the source. Okay. So, you have to what? Reply now. If your reply is good, he will stop everything. Okay. Or if your reply is not good enough. Or if you do not reply only, do not reply means not good enough, na? If I ask you something and you are not replying only, then what should I assume? It means you are escaping the income, right? Or you do not reply only. Then AO will complete his what? Complete his what? Inquiry. Inquiry, and then after he completes his inquiry, does he get the power to send you notice under 148? Yes. And if the assessee is giving you sufficient reason and good reasons, then he will not do anything. He will stop the proceeding there itself. Okay. So now let's see the what? Inquiry section. Page number 17.2. All of you. Conducting inquiry. Providing opportunity before issue of notice under 148. 148A has been inserted with effect from 1st April 2021. It provides the provisions regulating the pre-assessment inquiry after providing an opportunity to the assessee before issue of notice under 148. These provisions are replicas of Supreme Court guidelines rendered in the case of GK and Drive Shaft with a few modifications. The provision of 148A are given below. Earlier, there was a Supreme Court case which used to speak about this procedure. So now the government has made a provision only of that with some modifications. Modifications are as follows. Listen, beta. Please pay attention on the board first of all. Please. There are 4 steps. 148A subsection A, clause A. Then there is clause B, then there is clause C, and then there is clause D. Is it clear? Now, listen carefully. What is there in clause A? Step by step, whatever I said you, it is there in 4 clauses. Clause A. Before issue of notice, before 148, the AO shall conduct inquiry if required with prior approval of the specified authority. With respect to the information which suggests that income chargeable to tax has escaped assessment. Now the AO has income, now the AO has information which suggests that income chargeable to tax has escaped assessment. So he has to conduct an inquiry. Okay. Now how will he conduct inquiry? Before issuance of notice under 148, the AO shall provide underline an opportunity of being heard to the assessee. With the prior approval of specified authority, not required. It was required in last year. Now it is not required. Okay. For this purpose, a notice is required to be served upon the assessee to show cause underline. As to show cause as to why a notice under 148 should not be issued on the basis of information which suggests that income chargeable to tax has escaped assessment. So you have to give what? A show cause notice to the assessee. Okay. Now how much time you will give the assessee to reply? Okay. So you will give minimum 7 days and maximum 30 days. Read this. So minimum 7 days has to be given to assessee and maximum 30 days. Can that be extended? Yes, 30 days can be extended also if required. Check it. Is it clear? Because it might happen that if the question asked by Bhavisha is in this section, why an opportunity is given. The reason is because there is some income which is disclosed, there is some investments which are disclosed in SFT. Okay. We are giving you an opportunity so that you can explain the source. If you can explain me the source, then why to do all these assessments and all? Yeah. Okay. Why to unnecessarily open the assessment? It's a long drawn process then. It will go on for months. Shall I go ahead? Now, before issuance of notice under 148, the AO shall consider the reply of the assessee furnished, if any, in response to the above show cause notice. Obviously, assessee's reply will be considered now before issuing the notice. Now, then the AO will decide. Then the AO will decide whether or not it is a fit case to issue notice under 148 on the basis of material available on the record, including the reply of the assessee in response to the above show cause notice. Okay. Then the AO will decide that whether it is means if you give a valid reason, then he will leave you. If you do not give a valid reason, then he will issue a notice under 148 requiring you to file the ITR. Yes. For this purpose, underline an order shall be passed by the AO. The AO will pass an order under 148 A subsection D, clause D, sorry, with the prior approval of specified authority. Such order shall be passed within 1 month from the end of the month in which the reply referred to in 148C is received by him. So within 1 month, the AO will pass the order. The moment you give the reply, within 1 month from the end of the month, they will what? They will pass the order. If you do not give a reply, okay, it is possible now you are not replying only to the AO notice. So AO has issued you a show cause notice, but you are not replying. So then in that case, he will pass an order within 1 month from the end of the month in which the time allowed to the assessee was expired. Okay. Whatever time was given to you, maximum time is how much given to you? 30 days. So whenever 30 days will expire, he will pass within 1 month an order against you. Okay. That the inquiry is done. Now we can send a notice. Now listen carefully. So I am just putting these steps again on the board. So the AO has information. What shall he do? Shall he directly send the notice? Take approval and then send what? A show cause notice. Okay. How much time limit should be given to assessee to reply? 7 to 30 days. And then decide whether it is a fit case or not. Shall I consider the reply of the assessee while doing this? Reply shall be considered and after that decide. Okay. If assessee replies, then within 1 month from the end of the month in which he replies, and if it assessee does not replies, okay, shall I go ahead? Then within 1 month from when the time limit to reply expires. Okay. Now one last thing over here. That's it. These dangerous provisions will be done after that. Shall I go ahead? In some cases, the government says that you don't have to do inquiry also. Without inquiry, you directly send the notice under 148. In some cases. Shall we see those cases? See here. Read it. I don't have to explain much over here. The one line explanation will be sufficient. You read this paragraph and then I will ask you a question. Now let me tell you which are those cases in which there is no inquiry. Search, search, search. And where you get the information under 135A. So there are two cases only. Search, search, search and 135A cases. Where you get information from the assessee. Where you collect information, where you call information, etc. Okay, there is no need to do any kind of inquiry also. Now, shall I ask you some questions? Sure, you can go through the book and answer me. Whatever we have done so far till here. Don't go beyond this, not required. I'll be asking you question only from the first 3 pages. Shall I? Are you ready? So my first question. If a search is conducted on or after 1st April 2021, first question. Is inquiry under 148A required? No. Rest of you please answer Kajal Vinita. Second, inquiry not required. Is the AO supposed to satisfy the 5 points mentioned in 148? Sure. He is not supposed to do. It means can he directly issue notice? No inquiry. No need to satisfy yourself that income chargeable to tax has escaped assessment. The moment you do search, you get an automatic right to directly send the notice under 148. Are you clear? No inquiry needed, no 5 points to be satisfied. Clear? Those 5 points are deemed to be satisfied. Yes? Question number 2. Suppose there is a survey conducted on or after 1st April 2021. Is inquiry under 148A required? Inquiry not required. Read 3rd page properly, Bhavisha. If you are saying no. Is survey mentioned in 3rd page? Array, this minute detailing has to be done. And they have asked a question in November. They have asked a question in November 22 RTP on this point. On this point. Please tell me whether the inquiry under 148 is required for survey or not. Yes, because a survey is not excluded from inquiry. Without inquiry, you cannot touch the survey cases. Survey is not mentioned here. Are you able to understand, beta? This is not copy paste of previous page. Now you will not make mistake. Now you will be very careful. Are we supposed to satisfy these 5 points, or we can send the notice directly? These 5 points are supposed to be satisfied, or it is deemed to be satisfied? It is deemed to be satisfied because in 148 explanation survey is mentioned. Are you clear? Can I ask you the third question? If there is a survey, you can copy this particular thing or you can take a photograph of this afterwards. Okay, beta? First case, second case, third case. Survey on or after 1st April 2021 of TDS or TCS. Am I supposed to conduct inquiry? You don't have to think much. Survey is not covered in inquiry section. Automatic notice cannot be sent. You have to do inquiry for survey cases. Can I directly issue notice under 148 or I have to satisfy 5 points? Satisfy either of 5 points. Are you clear? And last but not least, there is an information collected from 135A. Am I supposed to conduct inquiry? Not required. But am I supposed to satisfy the 5 points? Yes. Can you see this? This is not copy paste of each other. Some point is mentioned here, some is mentioned there, some is not mentioned here, some is not mentioned there. Yes or no? Therefore, can I say, listen carefully, first, search and seizure 148 and 148A mentioned at both the place. At both the place it is there, na? Survey, normal. It is mentioned here but not mentioned here. Survey of TDS TCS. Not mentioned here, not mentioned here. And faceless collection of information. It is not mentioned here but mentioned here. Are you clear? These are the maximum possibilities that can come. Will you take the photograph of this beta for your better understanding? Take a photograph of this. I'll scroll this. Just wait, beta. अरे तू गाना नहीं गा रही है सुर में कब से? I don't know how to sing. कौन से एंगल से my voice is good यार? I'm shouting so much, it's so hard. For singing, you need a melody voice. My voice is so hard. I know that. इतनी मस्त आवाज है उसकी. He can sing. Right. You pass CA final exams with rank, I'll give you a copy. Take a photograph of this also. Done? Now, this is what this provision is all about till year. Okay, till year. Now, one last thing which is again an amendment made by Finance Act 2022. Let's read that, a small amendment which talks about certain approvals. 148B new section is inserted from this year. Finance Act 22 amendment this is, as you can see over here. I have written over here. Till last year. So, you can just imagine that in last year only they brought this provision. And in current year, they are making so many changes. They are not aware of what they are bringing also. They don't know how long this will last also. 148D has been inserted with effect from 1st April 2022 to provide that no order of assessment or reassessment or recomputation shall be passed by an AO below the rank of JC except with the prior approval of additional commissioner, additional director, joint commissioner, joint director in respect of assessments consequent to search, survey, requisition to reduce avoidable inaccuracies. Now, what do I mean by this? If an AO which is below the rank of JC, who is below the rank of JC? ACDC and ITO. If they want to pass an assessment order, what? Ultimately, an assessment order will be passed now on completion of assessment. In case of search and survey, which are sensitive cases, na? Right? So they have to take an approval. Approval from these people, these four authorities. Can you see that? Otherwise, they cannot pass an order. Not much important academically. Okay. So if an authority, if an income tax officer below the rank of JC is doing survey wala case, is doing search wala case, then he has to take an approval to pass an order from assistant commissioner, sorry, additional commissioner, additional director, joint commissioner, joint director. Is it clear? These four authorities are somewhat similar to what we have done in the first page of search and seizure, if you remember. Okay. So we'll stop the lecture here because after this we are going to start with the time limits for how many years they can make assessment. I have told you for 3 years or 10 years. In that also they have made significant amendments in Finance Act 2022. You can see over here. In 1 year they have made so many changes. 1 year. They have brought this new section in 21 and substantially changed in 2022. Pay attention please. Let's go ahead with the discussion of section 147 which we have started in the last lecture. A very, very, very important section for us. Whereby the assessing officer is opening the assessment of earlier years. Okay. So there are a lot of conditions that we have seen yesterday. He should have some information which suggests that income chargeable to tax has escaped assessment, so on and so forth. Okay. Now, pay absolute attention all of you. And let's now today understand for how many years they can send you the notice. So if you escape an income in 2022-23 and if you have not shown some income in 2022-23, so till when a notice can come to you. Okay. So let's try to understand that. So the time limit to issue notice. The time limit to issue notice is given under section 149. Okay. So the time limit to issue notice is given under which section? It is given under section 149. Okay. So what does section 149 has to say? It talks about the time limit to issue notice. For how many years? Till when the government can send you the notice. Okay. Shall we start? So pay attention please all of you. So there are two time limits, as I have been saying from the very beginning of this section, that there are two time limits. One is 3 years, one is 10 years, right? So let's see the first case. First case is the normal case and the second case is the special case. The normal case is the case of 3 years and the special case is the case of 10 years. Okay, now you have to pay absolute attention first of all on the normal case. Let's talk about the normal case first of all. Notice can be, put it in circle, issued within 3 years from the end of the relevant AY. Notice beyond the period of 3 years can be issued only in few specific cases given below. Now you have to pay absolute attention over here. Notice can be issued within 3 years from the end of the relevant AY. Okay, so now pay attention please. You have to read from year till year. From year till year, that's it. And then, now let's try to analyze this. Suppose If I escape some income in previous year 22-23, pay attention on the board please. Then notice will not be sent from the end of this year. It will be, the 3 year will be counted from the end of the relevant AY. The relevant AY will be 23-24. So from the end of the relevant AY, there is 3 years time limit with the government. And the 3 years time limit will complete on 31st March 2027. Okay, this is the last date. Last date to do what? Read carefully. Till this date, you should receive the notice or they should send the notice. This is the last date to send. Okay. Is it clear? This is the last day to send the notice. Okay. Now, so they cannot send notice beyond 2027? No. Generally, no. This is the last date by which they are supposed to send you the notice. Okay. Now, if they want to send the notice beyond this date, listen carefully. Say previous year 22-23 is the case. Assessment year 23-24 is the case. If they want to send beyond this date, then they can send till 31st March 2034 also. They can send. That is from the end of this, how many years? 10 years. They can send. But if they want to send beyond this, beyond 3 years, that is for the next 7 years. Or I can say for the last 7 years if they want to send. Okay. Then they have to fulfill certain conditions. They cannot just send the notice beyond 3 years and up to 10 years. For that, there is a specific case over here. Shall we read it? Let's read together. Notice can be issued beyond 3 years, but not beyond 10 years. From the end of the relevant AY, where AO has in his possession evidence which reveals that income escaping assessment represented in the form of what? An asset. Put it in the box, asset. Just ignore this point as of now. Ignore this point as of now because this is an amendment made by Finance Act 2022. Income represented in the form of asset. Okay. Pay attention up please. This time limit is very tricky. Once this is done, this topic is done. There is nothing great left after that. Now just jump directly here. Ignore this paragraph. Okay. Again I am reading from the above, from the very first line. Notice can be issued beyond 3 years, but not beyond 10 years, from the end of the relevant AY, where the AO has in his possession which reveals that income escaping assessment represented in the form of asset, which has escaped assessment amounts to or likely to amount to 50 lakh or more per assessment year. For this purpose, asset shall include immobile property, being land or building or both, or shares and securities, loans and advances, deposits in bank account. Now please underline this asset. This is the definition of asset for you. Assets includes immobile property, shares and security, number 2, loans and advances, number 3, and deposits in bank account, number 4. Now pay absolute attention. We need to understand the implication of this. Okay. Shall I? Now let's try to understand this with example. Suppose in previous year 30-31, okay, the AO has possession of an evidence that in, pay attention please all of you, that in previous year 22-23, the assessee has escaped income of around 50 lakh rupees or more than that. Okay, of more than or equal to 50 lakh rupees. Listen carefully. He has evidence. He has got the evidence in 2030-31 that in 22-23 assessee has escaped an income of 50 lakhs or more, and that income, obviously whatever you earn in the form of income, that has to be represented in some asset now. Yes or no? That has to be represented in the form of some assets, yeah. Okay. So now, suppose that is in the form of what? With this income which you have escaped, you have bought an office. So is this escaped income represented in the form of a immovable property? Yes or no, beta? So now, the AO has the right to do what? The right to charge this income even though 3 years have gone. Because in such cases, the AO can charge income up to how many years? Up to 10 years. Are you clear? So, there are two conditions over here. First is your escaped income has to be 50 lakhs or more and it should be represented in the form of an asset, and the government has given the definition of asset. Assets includes land and building, shares and securities, deposits in bank account, loans and advances. That's it. Okay. Is it clear? Now listen carefully. Yes, please say. I'll come. I'll come to that. Vinita has asked a question. If we only have hard cash of 50 lakhs or more, then what will happen? Then whether 10-year time limit will be applicable or whether 3-year time limit will be applicable. Now you guys only say, read the provision. What will be only read to the extent we have read. Huh? Don't read what we have not read so far. What will happen? What time limit will be applicable? If the escaped income is represented in the form of cash, it will be 3 years. Yes. Because there is no mention of cash over there. Forget about hard cash, Vinita. Let me tell you. If AO has evidence that you have escaped an income of 50 lakhs or more, listen carefully, and that is represented in the form of jewelry. What? Can it happen or not? How many years time limit will be applicable? 3 years or 10 years? Again, 3 years will be applicable, not 10 years, because the word asset does not include over here jewelry. Are you clear? Maybe that is a mistake by the government of India. They should write jewelry also. Jewelry is a very common asset which person will use to hide income. Yes or no? Clear? Now, this was the provision. Listen carefully now. This was the provision till last year. And yeah, last year only this section came, right? Now, that's it. The provision is over. Okay, now pay attention. Now pay attention. Now pay attention. Now there is one mistake in this provision. What we have learned so far. Okay. Now what is that mistake? Pay attention please all of you. Suppose beta in 22-23 I have earned an escaped income of 50 lakhs or more. Okay. Okay. And I have done some transaction with that. I have done transaction with that. Okay. Shall I say? Suppose some wedding is done with that money in previous year 25-26. Now AO came to know about this in 2030-31. Okay. When did he came to know? 30-31. AO came to know. Now this income cannot be charged in 2030-31. Right? Because for this income only 3 years time limit will be applicable, right? Because if you want to apply more than 3 years and up to 10 years, then the income should be represented in the form of asset now. Here the income is not representing in the form of an asset, but the income is incurred as an expenditure now. Yes. Similarly, you have done some wedding, some function, you have bought some, you have done some foreign travel, you have incurred some other things, etc. for your purpose. Then this cannot be covered. So Finance Act 22 made an amendment that apart from asset, there are certain other things also which now will be covered in this section. See, point number 2. We will again read from here. The AO has in his possession evidence which reveals that The income escaping assessment represented in the form of what? Point number 2 now. What? Represented in the form of what? Expenditure in respect of a transaction or in relation to an event or occasion or entries in the books of accounts. Now this is applicable from 1st April 2022. This came in the current year. The bold and the underlined words are amendment made by Finance Act 22. Okay. So now if we have done some expenditure, okay, of that escaped income of 50 lakhs or more, 50 lakhs and more is criteria that is necessary. So now if you have escaped an income of 50 lakhs or more, listen carefully, and if you have purchased some asset or if you have done some expenditures in relation to anything, in relation to any transaction, event, occasion, or you have passed some books of accounts entry with that, then you have to be scared about that for 10 years. The AO can catch you for 10 years. Is it clear? Now, if he wants to issue notice for, say, you have escaped income not in 1 year, but in 2 years, but in 3 years, can it happen? You have escaped income of 50 lakhs or more in 22, 23 also, 23, 24 also, 24, 25 also, yes or no? Then he has to send notice for every year. Check over here. Sir, every year the 50 lakhs mark has to be crossed? Yes. For whichever year the 50 lakhs limit is crossing or exact 50 lakhs is also fine, you will be liable for what? A notice up to 10 years.